Reliance Industries, like I was telling you, has seen this 2% dip in its revenue for the fourth quarter. But the net profit has jumped 22% if you look at it sequentially, and that number is 19,299 crore rupees. The chairman and managing director, Mukesh Ambani, is saying that initiatives in digital connectivity and organized retail are driving greater efficiencies in the economy. Let's connect with my colleague Shomit. He's here to break down the Reliance numbers for us. Shomit, fourth quarter, Reliance, how's it looking?
Well, Reliance Industries on a consolidated basis reported a strong set of numbers, and this outperformance was led by the O2C segment of the company. Now, to see the consolidated numbers, firstly, the revenues declined by around 2%, but the EBITDA number increased by around 9%, and the net profit jumped nearly 22% on a sequential basis. Segment-wise performance, if you see the O2C segment, EBITDA came in at close to 16,300 crore rupees, while analysts were expecting this number to be close to 15,200 crore rupees, and this was the key reason why the performance was led for the overall numbers for Reliance Industries. Now, if you see the retail segment EBITDA, that has come in pretty much in line with the street estimates at around 4,925 crore rupees, and the reason for this 2% growth or for the 3% growth on a sequential basis for the retail EBITDA was purely on the back of store additions that we had seen. When it comes to the gas exploration business, that has also reported pretty much in line set of numbers, just 100 crore odd miss that we have seen on the EBITDA front. The EBITDA number for the oil and gas exploration business has come in at close to 3,800 crore rupees. Now, the reason behind the O2C segment outperformance was purely the fact that the refining margins were pretty much steady in the fourth quarter of FY23. Along with this, the petrochemical margins also expanded because the petrochemical prices were also higher, and the energy cost specifically in the fourth quarter was lower because naphtha, which is one of the key raw material for Reliance Industries, the prices of this raw material was down nearly 20% in the fourth quarter of FY23. Moving on to Reliance Jio performance, it was a set of performance. Revenues, EBITDA and net profit all grew on a sequential basis around 1.7%. The ARPU number has come in a tad below than what the street was expecting at around 178.8 rupees per user per month, but the subscriber number was pretty much stable at close to 439 million. Now, the reason behind the slower or the muted growth for Reliance Jio is the fact that there has been no tariff hike in the fourth quarter, and the subscriber addition was also pretty much on the muted side. In fact, if you see retail Reliance Jio's EBITDA growth of around 1.7%, it was the slowest ever that we have seen since Reliance Jio has started reporting its number. To sum it up, the Reliance Industries result, O2C segment, a big outperformance has been seen. The retail business number and the gas exploration business number were pretty much in line with what the street was expecting. Similarly, the Jio numbers were also pretty much in line with what the street was expecting in the fourth quarter of FY23.
Prima facie, the numbers look definitely better than expected, particularly in the evening when the Jio numbers came out, I think, which is largely a flattish kind of a number that one has seen in case of Jio. I would think that there are two things which could possibly have made the difference here. One, better than expected numbers on the refining side of the business, and two, better than expected numbers on the retailing side of the business. These two things could have possibly made the difference. We'll definitely have to see the figure for comparison purpose. But to my mind, I think these two areas would probably make amount of difference. The third surprise thing could be, I think, either from the oil and gas exploration or from the financial services, where I think they could possibly report numbers separate. So we'll have to wait and see what the numbers are.
The Jio part and the retail part of the business would post a moderate or modest growth, at best a steady show. That exactly would have actually happened. Do you see this growth pick up in the coming quarters?
Well, Ajay, I think the growth has to pick up on the retailing side of the activity, largely because of the two reasons. One, the number of stores on the ground has increased to more than 18,000. And at the same time, the per store revenue is also been basically, I think, showing the decent amount of increase. In my viewpoint, I think if these numbers are on the higher side, largely because of the other reasons, including their own brand and its contribution coming in. In retail business, I think when you have your own brands, you have largely the ability to produce better margins, as we understand. And that's where probably in a detailed presentation when the company is making, one will probably try and understand this part of it as to how much is the contribution coming in from the own brands versus, I think, the other brand. Probably, I think that's where the larger part of the success seems to be. I'm still to get the breakup of the numbers on the retailing side of the business. But to me, it appears to be, I think, slightly better than we anticipated at this point of time.
Mayuresh is also here with us. Mayuresh, all the numbers have actually come in. Modest growth on Jio and retail, but O2C seem to have done the most of the heavy lifting. How was the street expecting, and how do you see the reaction on the stock price with this kind of performance?
Very good evening, Ajay. No, you're absolutely right. I think, as Devin Bhai also mentioned right now, I think on the retail part of the business specifically, the margins have come in approximately around 7.1%. The large consensus was 7%. So to that extent, the retail part of the business is holding up, and with new brands getting added to that core part of the business, along with more store additions, that part of the business should hold up. On the O2C, Ajay, as you rightly asked, I think Singapore GRMs for the better part of this quarter were close to $8.5. And therefore, with Reliance's ability to source different feedstock, the GRM number would definitely have been on the better side compared to Singapore GRMs. O2C was always expected to perform better, and I think the delivery of O2C has been relatively better, and that probably is seen exhibited in the console numbers, both on the EBITDA and the bottom line. Even on the petchem part of the business, my own sense is that with the kind of pricing that we are probably seeing both on crude and crude derivative, the downstream products would have also fared relatively better compared to the previous quarter. So again, I think relatively better performance on the EBITDA and PAT. I think the street will be enthused by that. Retail has held up pretty well. O2C was expected to do well, has done well. Would love to see more internals in terms of the Jio numbers. But again, here, my sense is that over the next few quarters, ARPU increases for the industry as a whole is a given in terms of what the competitors need to do, specifically Bharti, to fund their 5G capex. And the ecosystem will therefore warrant more hikes coming through, both in terms of the postpaid as well as general prepaid users as well. So good set of numbers, expecting a strong reaction for Reliance.